Hello everyone, welcome to the Trendline Investor channel. So in this channel, if you're new, there are a lot of videos, especially related to investment ideas, to swing trading, which have started recently, and also there are a lot of learning videos for you to learn and begin this trading investing journey if you're still struggling, or if you're still struggling to make profits. So just take a look at my other videos, including the swing trading video that I posted this week. And if you liked it, do subscribe to my channel and do like this video. So in today's video, the focus is going to be on how to find undervalued stock, stocks which are probably going down or probably worth looking at from an investment perspective after a strong fall. Okay, so we're also going to take two examples, from a well-known group in India, and we're going to look at how I found these stocks, how I'm keeping track of them, and why they are a good point from an investment perspective. Okay, this is not from a trading perspective. I mean, it's still not very bullish, but from a investing perspective, definitely if you're a value investor, then it's going to make a lot of sense for you to look at these two stocks from my eyes. Okay, so before wasting, let's not waste too much of time and let's get into today's video. So the first stock, or the group that we're going to look at today, is the HDFC group, and there are a few stocks. In fact, the entire HDFC group as a group itself has not been doing well since we had the CEO quitting last year, and since then there's been a lot of rumors that HDFC might not do well. HDFC has topped out, the banks might not do well, the subsidiaries might not do well. There are a lot of news going around, right? So let's look at these two stocks. The first stock that we're going to look at is HDFC AMC. Okay, so HDFC AMC was actually doing pretty well just after it was listed. It went really high, and then since then it has been going down. A lot of people are really questioning whether this entire AMC space is really worth it for investing, because all the AMC companies have gone down. So let's take a look at both the technicals and the fundamentals, and let's see what I have in store for you. So as always, let's start with HDFC AMC's fundamental analysis. I'm going to show you that nothing has actually changed in the last 2 years or so while the stock has been falling. So if you look at this company is a pretty large company. It has a 40,000 crore market cap. It has ROC of 36, 27 and 30, pretty good numbers. And it also has a decent sales growth of about 10% year-on-year growth, right? Interest coverage is pretty good. They have a lot of cash in their books, and they are obviously one of the biggest asset management company in India, and they've been promoted by HDFC Limited itself, right? And it manages around 4,06,800 crores of assets in India. Right now, I don't want to get into more details, but just let's take a look at the EPS, right, which we always take a look. Now, the EPS earnings per share has been steady around the 60 mark, and recently it's around 64 mark. Whereas the PE has fallen all the way from 66 to all the way to now 30. Right now, remember that when the stock price starts heading higher, and the companies don't do well, what happens is the stock price, even if it consolidates for some time, and if the EPS kind of remains stable, then actually the P ratio starts coming down. Right now, here in our case, the EPS has been stable, but whereas the stock has been correcting, right? The stock has almost fallen 50% from the top, because of which the overall P ratio has fallen and it's gone from 60 levels to 30 levels. Now, if you're just looking from a P perspective, definitely that's undervalued compared to the ROC that it generates. But let's take a look at the sales growth, and let's take a look at the yearly sales growth as well. The sales growth has grown very slightly. In the last 2 years, it has been around the 500 crore mark, not much increase in sales. But profit has also been around the 300 crore mark. In fact, it has been pretty stable. There's again not much happening there. But if you look at the yearly trend, this company has gone up from 1,000 crores in 2015 to almost 2,500 crores. So every year on year, we are seeing almost 5% growth there. 100 crores, 2,000 to 2,100, 2,100 to 2,200. So that's almost a 5% growth almost every year. But in 2022, we saw really good growth. That's probably because of the bull market that we had. And if you look at the compounded profit growth, we're growing at a 14% CAGR in the last 3 years, and the reserves have been pretty good. So overall, for me, nothing has changed in the company in the last few years for the stock price to fall 50%, right? It's just valuations catching up, and when valuations are pretty high, stock starts falling, and then you want to keep your eyes open and you want to know exactly the price that you have to be buying the stock. Promoters have reduced stake, whereas the FIs have increased stake, and this quarter again they've reduced stake this month. But the DIs have been lapping onto the shares since 2020. DIs almost have 11% stake from almost just 1% 2 years back. Now that shows some really good positive signs for this company, and that's my technical take. Now I know fundamental take. Now a lot of people would be having your own views. Many people might comment saying that AMC companies may not do well and all that. But let's keep all aside and let's look at what the price is telling us, and let's look at why at this point is HDFC AMC a good price buying point. So as always, I'm going to look at the monthly charts. And if you look at the monthly charts, we had this IPO listed in 2018. Then we had this amazing breakout. And then if you see, we are back to that levels and we are consolidating on those levels. Now, obviously, this is too early to call a bottom. So I might be completely wrong. So don't take my words as is. Do your own research as well. So right now we are consolidating here. And if you look at the monthly charts, right now we had a strong sell-off around that zone. Now, whenever I say, I'll make a separate video, but if you look at the zone, we had continuous sell-off around that zone. The long wicks indicate selling. And then we had a breakdown here. And since that breakdown, the stock was in one-way free fall. Every month there was strong selling. And then we saw some consolidation. And then we again had one in the month of May. We had a strong sell-off. But then the buyers pitched in and we had a long wick and we had almost inside bar. And this month we are seeing some strong buying again. Now, for the first time since that sell-off happened in September 2021, the first time I'm seeing a very strong green candle. And for me, that's a very positive sign because remember, even when it goes up, it has continuous green candles. And then the first red candle is when in a monthly chart starts indicating sellers coming in. Now, same way for me, the buyers are stepping in now. And the other thing that I'm going to look at is the trend line. Right? Now, what I'm going to do is the stock had a very, so this was the trend line here, right? And if you just take this and if you extend it, you'll see that we had a support around this zone, right? But now what I'm going to do is I'm going to connect this point here and see whether this makes sense as well. Now, if I slightly correct this trend line, now it's not a perfect thing to do, but what I'm expecting is that this trend line might just hold. So trend line is not always a single line. So what you can also do is take another line there, and then you draw that line. And for you, that is a very important zone. So I'm going to remove all of this. So this is a confluence of supports because we had this horizontal support here and we are also now having this trend line confluence support. So I'm going to remove this just to keep it more clear so that you can see it much better. So if you look at this, this is a very strong support zone for me. So until the levels of 1700 is not taken out on a weekly closing basis or a daily closing basis, for me, this is now a very good investment candidate. Now, the other reason that I'm saying this is a good investment candidate is because of the volumes which came in the week of 30th May. We saw some amazing volumes here and the volumes have been spiking now. Even if you see the week of 27th June, we had some above average volumes. Even the week of 23rd May, we also had above average volumes. So for me, looks like this sell-off is going to be over and we are probably slowly and steadily, probably heading higher from here. Now, switching to the daily chart, just to show you what's happening in the daily chart. We have again started forming higher highs. So we see this zone, this is a higher high zone. And now we are probably, probably a few more days of consolidation. But for me, that looks like a very good setup to take an entry from an investment perspective. So do not invest more than 2.5% of your portfolio, invest at current market price and keep a stop loss at 1690 or 1650 to be a little safe, right? So 1650 buy current market 1950, so that's around 300 points stop loss, around 15% stop loss, and we are looking for targets of around 3300 levels, which is the all-time high which we had recently, right? So we're looking for targets of 3300 and also all-time high. So if you can hold on to the stock for the next many years, you might get a really big multi-bagger in your portfolio. Okay, so that's my technical take on HDFC AMC. So that's the first stock. If you did like my analysis, do subscribe to my channel. Now let's take a look at the second stock. Okay, second stock is also from the HDFC group, as I mentioned, and the second stock that we're going to look at today is from the life insurance space, which means it's going to be HDFC Life Insurance. So let's take a look at the fundamentals. Okay, and in this stock, I'm going to tell you how I actually found the stock and how I'm tracking the stock as well in the technical analysis. Okay, so this company also is a pretty large company. It has around 120,000 crore market cap. P is pretty high. It's highly overvalued, but all the insurance companies usually are highly overvalued. I mean, I'm not sure if that's the right way to overvalue insurance companies. So if you do know, let me know. But for me, just keeping it very basic, P is something that I look at. ROC is pretty good. ROE is good. It doesn't have a good sales growth. So that's a negative, thumbs down. But overall for me, HDFC Life, we know the brand value. We know that it's one of the biggest player. And the company is kind of a stable company in terms of the financials. So it has consistently posted strong EPS. The PE has come down because of the fall in share price. But otherwise, for me, this company is obviously a company to look out for. Now remember, there are all the companies here, as I said, all the life insurance companies kind of trade around that 70 to 80p. LIC trades at 100p. But relatively, if you look at the private sector, as it said, like SBI Life Insurance is more of government holdings, but HDFC Life is more of private. So from the private space, this is the biggest player in the life insurance space. So look at the quarterly results. So it's kind of around that 14,000 to 20,000 crore market cap, sales. And we had some really bad numbers in June. I don't know why. But looking at the yearly trends, considering that this is a large company and it might do well, yearly trends, 70,000 crores all the way to 67,000 crores. I think we hit a peak in March 2021, and now the sales are consolidating, right? So from a fundamental perspective, it's an okayish company because it's not been able to grow at the same rate. But for me, given the brand name and given the group, I think it's a decent company from a fundamental perspective. So shareholding pattern, promoters have reduced a lot of stake here. Bad sign. FIs also reduced stake. Bad sign. DIs are kind of holding on to their shares, and most of the shares are held by public. So it seems like DIs and promoters have offloaded their shares to public. But Excel Industries has taken a stake recently of 4%, and that's the only positive sign probably. But overall, from a fundamental perspective, this company might start posting better results going forward. Given the history of the company, probably there was a one-off problem because of which the sales were bad, and probably that's the reason why the stock corrected as well. Now, when you take a look at the technicals, you realize the stock corrected almost a good 30 to 50%, and that's probably because of the expectation that the market is not, that the sales might not be really good. So let's take a look at the technicals. As always, I'm going to go to the monthly charts and I'm going to see this stock, right? Now remember, in the monthly chart, the stock is in a clear uptrend, right? So we've had higher highs, higher lows continuously. And now what I'm going to do is I'm going to switch to the weekly charts. So, okay, let's take a look at the monthly charts first. And here, if you see, we've kind of had a strong fall in month of Feb, and then we had 3 weeks. And then this lower VIX in the last 3 months is indicating demand. Okay, now that's the first reason why, from a fundamental perspective, from a technical perspective on the monthly charts, these wicks and increasing volumes is kind of a positive sign. Okay, now switching to the weekly charts, let's show you what I'm looking here again. Look at the volumes this week. Now, this week the volumes are pretty good, and I did post a similar stock for the swing trade this week. If you haven't watched it, watch it out or check it out. We had a similar kind of structure there as well. So this also might be a good swing trade if you want to take it. But how did I find this stock, right? Now, if you go to the weekly charts, I look for reversal setups. Now, if you know my scanner, I have 4 dashboards in my scanner, and I look for breakouts and reversals. On the weekly charts here, I look for CCI crossing, coming above from -100. So if the CCI is below -100, which was here, the stock is in a strong downtrend. And when it comes back above -100, which means it's probably showing signs of reversal, and that's when I started tracking the stock. And look at those green candles, strong green candles are coming in now, and that indicates that the stock is showing signs of buying or demand. And also volumes have picked up since the bottom. So we had a strong sell-off in the week of 20th Feb, the massive volumes there, but that sell-off didn't continue. So it just stopped there. And then we are seeing this nice base here, which is forming, and we're seeing some nice volumes also coming in. Okay, that's how I found it. Do let me know how you would find reversal stocks. I'd be glad to learn your methods as well. So now let's take a look at the trend line, which is my favorite. So I'm going to hide that volume just to draw a trend line for you. So I'm going to take this channel and I'm going to connect this point here, and I'm going to connect this point here, okay, and just extend this point. Now, if you see, this trend line needs to, as I said, it's always a zone, so don't fixate yourselves on just single points, right? So this is a zone that I think that this stock has been holding very well, right? So you can mark this zone, and this is a very, very important zone for me. And if the stock comes again to the levels of, even 500 levels, I definitely buy this stock, okay? But for now, how should you be investing in the stock? Okay, so I'm going to extend this, and then you see there's a perfect channel, right? So it's a perfect channel in my opinion, one of the best channels I've seen in a blue chip stock. But how should you be investing in the stock? So once you find such setups on the weekly charts based on the reversals, what you should be doing is wait for a base. So don't buy, as soon as you see the stock coming like this, don't buy immediately when the stock is falling, expecting it to reverse. Wait for at least a green candle on the weekly charts. Now, if you see, we had the first green candle here on the weekly charts, and before that we had a red candle. Now after the red candle we had a green candle, and these 2 weeks the volume is very strong, and that's when you take your first position. So, and then you wait for the monthly closing, and the monthly closing you again see a green candle, and that's when you confirm that this stock is probably making a base. And then after your first position of 2.5%, as I always say, don't go beyond 2.5%. You wait for the stock to form a base, right? It does consolidate, and then try to buy at low levels. For example, here around 520 was a good buy the last 2 weeks, or even now it's a good buy, right? And then you decide what is your stop loss. The stop loss here would be this low, which is around 500 levels, right? 497 or 500. The stock is trading at a 555 levels, which is just 10% away from a stop loss. That's a very, very low risk for an investment candidate. Investment stocks, if you can 10%, I sometimes have 10% stop loss for my swing trades. For investment purposes, if you can get 10%, that's amazing, because here, once you keep a stop loss at 500 and you invest at the current market price, I'm looking for targets of minimum 800, which is the upper nerve channel. So 850 is going to be my target. It can head much higher levels, but for me, 800 is where I'd be looking to book some profits in HDFC Life Insurance, because this is a large cap company, so we don't expect it to double or triple in the next many years. Probably it might double in the next 3 to 5 years, but not in the next 1 year or 6 months. Remember, this is a F&O stock, so it might take its own sweet time. Okay, so yes, so with the 50-point stop, we're looking at almost a 250-point reward, which is a 1:5 risk reward. So 50 points risk, 250 points reward. So that's 1:5, which is an excellent investment, risk reward from an investment perspective. So yeah, that's the second stock I want to discuss today from a technical perspective. Now remember, position size is going to be the key. If you can go with 5% portfolio size, it's totally fine in both the stocks. Just ensure you keep your stop loss, or you can even do a SIP if you want to do a SIP. These kind of stocks are long-term growth stocks. They tend to grow, not really growth stocks, but blue chip stocks, and they tend to grow. They cannot really collapse. The economy cannot afford collapse of such companies. So do let me know if you like these two stock videos from an investing perspective. And if you did learn how to invest, don't forget again to subscribe to my channel. I'll see you in another video. Until then, take care, stay safe, and trade safe. Bye-bye.